Antimicrobial technologies has not been high on the list for those looking at the markets from a trading or investing point of view until the recent global pandemic, that is, of course. Now it's front page news. One company that's been riding the wave is AIM-listed Byotrol. Its share price has risen almost 390% from the lows back in January to the highs in April. Its range of sanitisers and disinfectants has been used to combat the spread of COVID-19. It has a lot of other products as well that it's been managing to market. It also has exposure to the farming community and also sells into the pet retail space. Its business model also includes licensing agreements, and it's recently signed a new deal in the States. More now with the chief executive, David Traynor, who joins us online from Cambridge. David, it's really good to talk to you. Thanks indeed for your time. This is a fascinating story. No one ever knows what's around the corner. How has Byotrol been coping with this excess demand that you've doubtless been seeing?
Well, there's a short-term answer and a long-term answer. The short-term answer is that we're doing everything we can to make as much of our product as we can and distribute as quickly as we can to customers. And that means simple things like increasing our supply chain, increasing our working capital, standard things that you might expect. At the same time, we are working on the long term, because it's one thing making extra margin in current period in an ethical, cautious way, but to build long-term value in the company, we need to put in place longer-term supply agreements with our customers and consumers. So, for instance, we are working on licensing agreements, longer-term manufacturing agreements, longer-term supply agreements, because that in the end is what is going to make the company better and bigger over time.
I want to take a look at the licensing agreement in some more detail that you've just signed in just a couple of minutes' time. But let me just ask one more question. What scientific intelligence are you working on from this point? Clearly, as chief executive, you have to invest in the right areas. What are you doing to capitalize on this opportunity, but at the same point, not to overextend, just in case this recent wave of demand does start to tail off?
COVID is magnifying and accelerating trends that we are seeing in our industry for quite some time. And those trends are massive global demand for biocidal products over time. They are needed in the world. Fragmented supply, plenty of global multinationals selling huge tonnage of biocidal products, but then the spectrum all the way through to small mom and pop shops, cleaning offices and houses. And then regulations now come on top, because governments and supranational regulators are saying that biocides can cause damage to the environment if used incorrectly, or to the human being if used incorrectly. So now we have to get all of our active ingredients approved by the European Union and by the EPA in the States, and the products that come from it also have to be approved. So the weaker competitors disappear because they can't go through the process. We've been concentrating on getting our science and our regulatory position absolutely watertight. And that was all starting to work for us prior to Christmas and COVID happened. So then when COVID happened, of course, that accelerated everything, because you had a combination of a supply shock in our industry and a demand shock from the world reacting to what was going on around coronavirus. So we are very confident that our science is stable and is going to endure and is going to be relevant in the world from now on. And we're very confident that we can tie up longer-term supply licensing deals to maximise the financial benefit for us on that. But in the meantime, we make as much as we can, as quickly as we can, for the supply chain that we currently have. And we're a 6 million business at the end of the last financial year to 31st March 2020. We're not going to turn into a £60 million business overnight, and I wouldn't want to, frankly, because that creates all sorts of issues as well. But we can be significantly larger than we were. So it's a combination.
Now, I know that you are in a closed period, so I can't ask some detailed questions about balance sheet and profit and loss and so forth and forecast, but I'm interested in the way in which the company has been growing, because you said before COVID, this was a business that was beginning to accelerate. You saw, I think, a doubling of profits year over year up to the end of last year or so. You've got current cash, I believe, of 1.7 million. How do you see the business as a £26 million company, which is what it is, moving ahead? You talk about your ideas as to where it's going. What do you see as the main drivers from here, on the basis that you have these two major strands of the business, the sales and also the licensing business, as you move forward?
If you look at our industry, the multiples are very high across the board right now. And that's because there's this structural change taking place and there are fewer and fewer people competing in it. right now, and people that own effectively chemistry real estate, so regulatory approved efficacious chemistries, are in high demand and are going to carry on being in high demand while the current crisis endures and beyond. So I think that the multiples will carry on being high. I think that we're going to be increasing our earnings substantially, combination of product sale, but also licensing. And I think you're seeing similar things in companies elsewhere in our space. You look at Tristel, for instance, excellent company, is doing really, really well. And I think it's benefiting from some of the similar industry characteristics that we are.
Let's take a look at this most recent licensing arrangement. I think you got an upfront cash payment, I believe, of something like 250,000 sterling, was that, or was that pounds? I'm not quite sure, but an upfront payment. And then you say thereon, you will then end up getting, I think it's quarterly payments, is that right? Do we have any idea at all as to how big this US licensing deal is going to be for the company?
One of the chemistries that we developed a while ago was a long-lasting antibacterial, antiviral surface spray for US markets. The EPA, Environmental Protection Agency in the States, regulates that claim. So you can't make that claim in the US unless you have their specific approval and have passed some tests that are really, really difficult to test. And when we first passed last year, we were the only chemistry in the US that had that claim. I think there's been one more since then, but it's very, very difficult. So we had a very valuable asset protected by regulators effectively. And we were looking at the best way to commercialize that. And we found quite quickly that to get manufacturing up to pace in any volume in America is a very expensive and difficult thing to do, particularly doing it from here. And we also found that the advertising spend that the retailers needed to get us to any size, to a size that they would find impressive and we're going to plow more money into and more shelf space, we need to spend about $5 million to get to $20 million retail sales. And we just weren't prepared to do that because there's opportunities elsewhere where the risk reward is better. So we started looking for partners, corporate partners, finance partners. This is all prior to Christmas. And again, we found that because we were quite small, though the asset was valuable, we weren't looking at deal shapes that we thought were attractive. So when COVID struck and demand for these sorts of products became so huge, we were left without a decent manufacturing base at the time, but we still had a valuable asset. So we decided to do a deal with some people that we trust. So professionals in our marketplace located in the US who could get our product to market much more quickly than we could. And we, at the same time, can reduce the costs for ourselves in the States. So the people we're working with, they paid us a significant chunk up front. Most of the money we're going to make will be on royalty. And now the execution risk is on them to deliver very quickly. From what I've seen so far, they're going to do that. I suspect they're going to start in niche markets first of all, where it's a very valuable claim, probably in transport. But I think they have big potential in retail as well. And we'll see how they go. We're doing whatever we can to support them because obviously every dollar they make, we make a chunk as well.
How much of the business that you run is dedicated to licensing, and how much of it is direct sales? Is there an easily sort of identifiable proportion coming through in revenue from each area of the business?
It's a really good question, but it's been changing. So when I took over the business in 2013, we basically went a bit quiet to spend a lot of time getting our technologies up to speed and getting them regulatory approved. And at that time, I think we were 18 employees for a good few years, of which 6, 7 were actually lab-based. So we were a very, very tiny company on a reasonable scientific base. And we've launched the business with a bit of help from shareholders, but also through doing licensing deals and technical development deals, and which included a little bit of sale of IP as well. And at that point, if you looked at our revenue, I was skewed towards a licensing and technology deal. When we bought Medimark a year and a half ago, which is a business that had very strong sales and marketing, but relatively weaker technologies than we had, suddenly we were looking at a situation where we could look at our product sales, covering our costs and exceeding our costs, with the licensing business being on top of that. And the idea is that as our technologies improve and our licenses improve, we can then feed back some of the technology from there into product sale as well. So the two things should work in tandem and step up. I would say as a business, I'd be looking to do between 10 and 20% in licensing revenue per year. But clearly, if a big licensing deal came along, we would take it because it's very high margin for obvious reasons, and it's very long term. So it's a really good. I really do like the licensing business. They take a while to do and get in place, and they're quite demanding in terms of keeping the technology up to the level the licensees need. But it's a really, really good business.
I'm interested in picking up that point about Medimark, actually. I was looking at the website and doing research for this interview, and I came across Medimark as being the main place where you see the products that you market. And of course, as you say, you bought Medimark back in 2018. One, is that now fully embedded in the business? And two, are you going to do more acquisitions like that to bolt on more businesses as you grow the company itself?
Well, we bought Medimark in 2018 under earnout, and their payout was linked to EBITDA performance for the next 2 years. And so we left them alone during that time period as part of the deal, supported them where we can. But basically, it's up to them to produce profits, contribute to the company, but also for the shareholders of that company who are leaving. We get on very well with the team, obviously, very high quality. And we have been working closer and closer. So by the time we got to February this year, the two groups decided actually we should accelerate that earnout between us. We should close it off. We paid them some cash and some shares. From mid-February, we became one company. Now, then of course COVID hit, and all the normal models you expect for integrating two companies went right out the window because most of us can't leave our houses, and all the sort of conversation you need to have as a group is very difficult to have when you're doing it on screen. But what I would say is that they're an impressive new voice in the business. They are much more product sales and marketing oriented than we have ever been. And we are much more technical than they have ever been. And there's some real gold dust there between us. When I look at my impending financials for this year, obviously I'm expecting growth in the top line and expecting growth on the bottom line through what's going on and through the structural change. But there's also some really good synergies there as well. Not so much on people or cost because we are unbelievably complementary, but cross-selling and them speeding up some of our processes and us making some of their technologies more enduring. There's some really, really good things to go on, but I haven't been able to get on those properly yet. We will be doing that as the lockdown eases.
Would you like to grow by acquisition from this point? We talk about the 1.7 million on the balance sheet. That's a little bit of money, but it'll get you some way to getting a deal done, I guess, if you've got to borrow the rest or whatever. But are you on the lookout for further acquisitions?
Well, if you look at our board, so my chairman, John Langlands, was the chief executive of British Polythene for a long time, did 30-something acquisitions. My CFO, Nick Hellier, ex-investment banker, ACA, was on the takeover panel for a couple of years. And then I've got a mix of very high-quality strategic thinkers and technical people on the board as well. So we know what we're doing on the M&A side, which is good because we know what a good opportunity is. On the other side, we know what the risk profile is as well. The industry environment is very, very interesting for us because as regulations bite, many companies in our space are struggling to produce and support the technologies that they're selling, and they will need tie-ups. Similarly, some companies are overtrading, and similarly, some companies are in need of a big brother to help them grow in their particular niche space. So there are loads of opportunities. Do I see it as a way for us to grow in the short, medium term? No, not really, although opportunities do come along. Do I think we've got enough cash to grow the business where we are? Yes, I do. So I'm very confident that organically we can do very well with current resources. But of course, there's always opportunities that might make us change our view.
What about the operational side of things? What's your supply chain like? How difficult is it to get the product in through the door to get it back out again? We're hearing a lot about the questions about how this experience, the global pandemic, is seen possibly to be shortening supply chains and making them more localized in some areas. Do you see that happening for your business? Are the supply chains likely to change, do you think?
Yes, I mean it's fascinating and occasionally infuriating, but on the whole, I think we're doing an excellent job. The team I've got, I'm really impressed with how they've got through this so far. So when the initial crisis hit in Europe, there was a massive shortage of packaging, so trigger spray heads and foam dispenser heads for hand sanitizers. suddenly you couldn't get hold of it for level money because it was all being made in, you guessed it, China. And that has eased now as China's coming out it's coming through their own, it's coming out of lockdown. But then you move on to shortages in ingredients, and individual ingredients tend to be made in individual countries. So, for instance, we had 3 suppliers of a particular form of biocide that we used in small amounts, and I was feeling quite relaxed about it until I found out all 3 suppliers bought from India. And when India went into lockdown, suddenly that ingredient came in short supply. And that has happened in a few different chemistries that we have, but we tend to know the industry. We tend to build up ingredient stock where we can, where we think there's going to be a shortage. And in some instances, we pay a bit more to get hold of it if it's very important formulation that we have. I think that we're going to end up probably putting more money into working capital in the future to guard against this happening again. But obviously, we want to do that in an efficient way. I think it's probably just as likely that we will be looking for to ensure that ingredient supplies come from several different countries, or we have alternative formulations that we can use. Alternative ingredients we just slot in if there's a particular problem with any particular chemistry we're trying to get out. I think actually being relatively small is quite good in this situation because we can jump from factory space to factory space to get capacity here and there. We can take in small orders of chemistries that are enough to keep us going for quite some time. Part of the joy of doing licenses with people is that they then take responsibility for manufacturing. So if you look at the license we just done with the SC Johnson Professional, part of the thinking there was that we can provide them with the technology, and then they can make it themselves with their extraordinary buying powers. So it's going to result in more of our product going to customers that we do on our own.
Okay, let me just quickly round up and go back, if I can, to complete full circle to the share price chart that I had up earlier on, with that big rise that we saw up from 1.5 pence back in January all the way up to over 7 pence at one point. £26 million company this is. Just want to quickly reference, if I can, one quote I think I saw from one of your accounts recently: full year 2021 to be a year of significant growth in revenue and EBITDA. Let me just quickly round up with asking you about the future. As I said, I know you're in a closed period and you can't talk too much about the details, but how do you see things developing from here? And what is priced in at these levels? Is it an overpricing, do you think, that big rise that we've seen in share price? Clearly, you have no control over the share price directly, but does this represent a better value of the company?
So 6 million quid revenue last year. In March, we did £1 million in revenue.
Yep.
In April, we did £1 million in revenue. And in May, the numbers are going to be quite good as well. So if you do the maths and you allow for some tail off, then you can see roughly what sort of range we will likely be. Now, what we don't know is how long this is going to endure. What we do know, though, is that it is going to endure in some form, and there's going to be heightened levels of demand for our products over time globally, exacerbated by the fact that many suppliers of similar chemistries are disappearing because they can't go through the regulatory process. Now, so the business will be ahead in revenue, I think, quite substantially, and ahead in profitability quite substantially. And then you look at what that's going to mean for years after that, and I think we're in a very, very different world now. I mean, you look at the way employers are changing their behaviours. They realise they need to keep their work environment safe for their employees and their customers and the other stakeholders, and they will need to attend to it in a way they haven't done before, with chemistries that are very high performance and are proven to be high performance. It's not just a cleaning product anymore. It has to be antiviral, antibacterial, and it has to be cleaning as well. So, and in consumer land, individuals now get right to their very core that they need to take a significant responsibility for their own protection against infection as well. My kids have changed their behaviours. My teenagers have changed their behaviours now, washing their hands a different way, using hand sanitizer. They really understand that they need to be a lot more cautious. So I think the meta trends are all moving in our favour. I think the industry trends are moving in our favour. And I think short-term sales boost that's going on, of course, is moving in our favour because it improves the quality of our business and gets volumes up, economies of scale, and those various things. You put all those together, and I think it has to be beneficial for the valuation of the company over time. And if you look at the multiples against that, with some guesstimates what the numbers might be. I know that we are trading at quite a high level, but when I compare those to other people in our sector, I would say actually there's still quite a long way to go, particularly if you believe the longer term trend. Now, that's as far as I'm going to go and talk about share price. It's been drummed into me that share price is a matter of market sentiment rather than necessarily fundamental value of the company. All I know is that the company is going to be significantly stronger this time next year and significantly more profitable. And I think that should be reflected in the share price as well.
Look, David, it's a pleasure. Thank you so much indeed for joining us. Interesting story, and we'll look forward to more. Certainly good to talk to you a little bit later on in the year to see how things are developing. That's David Traynor. He is the Chief Executive of Byotrol. For more videos from us here at IGTV, join us on Twitter @IGTV and subscribe to our YouTube channel.